Hello and welcome to another update video about Atom. The Atom chart hasn't really changed since the last update. However, obviously it made some progress and the wave count doesn't need to change at all. The idea is still that the move initially here, the move between October last year and the December highs, this can be counted as a wave one. I don't really like the look of it, but it is a five-wave move, a potential five-wave move. After wave two bottomed here in October, and the third wave could now be unfolding here. And we are currently, or the price already dipped into a support area for the wave two, which typically starts after a wave one is complete. The pullback was already quite substantial. So the peak was around $12.60. The pullback reached already $8.80. Yeah, here nearly the 50% retracement level. That is, to be honest, valid wave two. It's significant enough for a wave two. But I have to be honest with you, the pullback looks more like a five-wave move so far. So if the A wave is a five-wave move, we might be dealing with a zigzag pattern here. And that means the B wave is still to play out, and yeah, it might be complete already. I mean, if you look at the resistance area I put on the chart, the B wave reacted basically already to the golden ratio, to the 61.8 retracement level of the decline, and it only showed a three-wave move up. So I'm counting the move down as an A wave, the move up as a B wave, and yeah, the C wave might have started already. If the C wave has started, then we can calculate a target by taking the length of the A wave, then we go to the high of the B wave, and the 100% extension level of the A wave is going to be the first main target to watch. And this is at $7.81. So this is, again, not super reliable. It's not a must to get there. It's not an absolute need, but it's typically one of the more reliable levels to watch in such a support zone. Once we have the A wave complete, the B wave potentially complete, we can look at that level as a potential target for wave C. But really, all wave C needs to do is to produce 5 waves and to ideally end below the low of the A wave. And because the wave B isn't very aggressive, we look for the C wave to reach, somewhere below the A wave, substantially below the A wave. Possibly, as I just mentioned to you here, the $7.80 level. Also, another level that is relevant is the 61.8 retracement level of the initial rally. This is at $8.09, and below that level, we've got the 78.6 retracement level, which is at $7.18. They are all levels to watch in this pullback. The pullback, looks corrective at the moment. I mean, it so far shows us an A wave, a B wave, and as long as it stays a three-wave move, and we see an impulse after the C wave is complete, we should be looking at a third wave rally here to $20 plus. How do we calculate that? Well, I can't really give you a clear target for the wave 3 yet, because I haven't got a low in place for wave 2. But let's just base it on the assumption that the wave 2 might bottom around, maybe $8.10. Then typically we would like to see a third wave get at least to the 1.236 extension, better the 1.38 extension, so round about $20 plus for a third wave, and then we should still get a wave 4, should still get a wave 5, and essentially I think we might land around $30 plus just in this larger degree third wave. So it's an interesting setup at the moment. The support zone itself can be used to look for potential entry points. In this subsequent or in this corrective pullback, which probably isn't yet finished. And I mean, the way to do this, you could just scale in at tranches as the price goes lower, but it's not like blindly buying the dip. You have to be smart with your position sizing. You have to know that below $7.18, probably the setup is going to fail. The invalidation point, however, isn't reached until the price breaks below $6.19. Only then really the setup completely fails. But I have to say from experience that, let's say 9 of 10 setups are failing if the price breaks below the 78.6 fib level. So that's the warning the warning that we need, because we don't want to wait until invalidation. Okay, so that's just important to understand. If we go to the 1 hour chart, yeah, I mean, so far this move down here of the B wave high, it looks like a 3-wave move. So the C wave might turn into an ending diagonal. That means this might be a wave 1, this might be a wave 2, 3, 4, 5. So that's a possible roadmap. What I could also imagine, and that's absolutely another valid option and actually quite likely, if the price turns to the upside from here, it could be an extension of the B wave. That's valid as well. That's valid as well because the move down was only in 3 waves. This could be an A wave to the upside, a B wave to the downside, maybe even gets another low, and then a C wave up, and we have an extended B. It might even still stay within resistance, and then we could come down. That's just the nature of these corrections. How do we deal with that? Well, it's not predictable. However, we can use these support areas to look for entries. Should the price make profit available in a B wave, which is not always the case, then you can take some partial profits potentially, or at least you can consider that. You might move up the stop loss and then look for another entry should the price dip back into the C wave. That's sort of how you could deal with that strategically. It's just an idea. Essentially, you need to decide that for yourself. But yeah, that's my update about Atom. So looking good at the moment. It's a potential 5-wave move to the upside. Typically, that indicates an uptrend is unfolding. Then we're typically looking for a support zone and the pullback that takes place into the support zone. And that's what we witness right now. So it's quite interesting at the moment. So I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.